Nikola's founder has been sentenced to 4 years in prison on charges of fraud. So how will this affect you as a stockholder? And should you continue holding NKLA? Keep watching for the next 10 minutes as we take a look at what the future holds for Nikola. But before we do that, subscribe to our channel $1 World for regular stock market updates. In a dramatic turn of events, former Nikola CEO Trevor Milton has been handed a 4-year federal prison sentence, a verdict that followed 14 months after a jury found him guilty of disseminating falsehoods about the hydrogen electric vehicle company he once spearheaded. Facing the possibility of 60 years behind bars, Milton's defense implored U.S. District Judge Edgardo Ramos for leniency, advocating for no jail time. In a poignant courtroom moment, Milton, visibly emotional, acknowledged the verdict but vehemently denied culpability for the alleged transgressions. The sentencing fell short of the prosecutor's request for an 11-year prison term, drawing a parallel to another high-profile case. They argued that such a sentence would align with the one meted out to Elizabeth Holmes, the founder and CEO of Theranos, convicted of securities fraud last year. In a pre-sentencing document, the Justice Department prosecutors drew a damning comparison. Just as Holmes lied about Theranos-manufactured blood analyzers, Milton lied about the operability of the Nikola 1 semi-truck. The repercussions of Milton's sentencing were immediately felt in the financial realm, with Nikola's stock plummeting more than 9% in the wake of the news. Milton's journey from a high-flying entrepreneur to a convicted felon has captivated the business world. His saga underscores the increasing scrutiny surrounding ambitious startups in the electric vehicle sector and raises questions about the veracity of claims made by industry leaders. As the dust settles on this legal saga, the fate of Nikola hangs in the balance, and the electric vehicle landscape faces intensified scrutiny in the aftermath of one of its most sensational legal battles. Founded in 2015, Nikola emerged onto the electric vehicle EV stage with a vision to revolutionize transportation through the development of electric and hydrogen-powered semi- and pickup trucks, accompanied by an extensive network of hydrogen fuel stations. The pivotal moment for the company came in 2020 when it went public, executing a merger with Vector IQ Acquisition Corp. (VTIQ), a special acquisition company led by former General Motors GM employees. The grand ambitions of Nikola took center stage as founder Trevor Milton enthusiastically promoted the company's plans. In June 2020, the company made its public debut, and Milton boldly declared to Yahoo Finance that Nikola expected to have its first electric-powered semi-trucks on the market in 2021, with hydrogen-powered options slated for 2023. His audacious goal was nothing short of challenging the dominance of the iconic Ford F-150. However, the euphoria surrounding Nikola's ascent soon turned into a storm of controversy. Questions arose about the feasibility of the company's ambitious plans shortly after its initial public offering. The situation escalated when short seller Hindenburg Research accused Milton of securities fraud, painting a picture of deliberate deception aimed at misleading investors. One particularly damaging allegation centered on a video released by Nikola, purportedly showcasing its Nikola 1 semi-truck in high-speed autonomous travel. Hindenburg argued that the vehicle was, in reality, just rolling down a hill. Under increasing scrutiny, Milton's leadership unraveled. Days after the IPO, he faced probing inquiries about the viability of Nikola's promises. When Hindenburg's accusations gained traction, Milton stepped down as executive chairman and board member, citing his wife's illness as the reason for his departure. Yet the fallout continued, as the U.S. Justice Department and the Securities and Exchange Commission (SEC) initiated investigations. At the subsequent trial, prosecutors contended that Milton not only made false statements regarding Nikola's hydrogen fuel cell prototype truck, but actively promoted it as a fully functioning vehicle. Jurors found the now infamous video misleading, suggesting the truck's autonomous capabilities when, in reality, it was coasting downhill. Furthermore, Milton was accused of fabricating the existence of hydrogen fuel manufacturing and fueling facilities. This legal saga reached its climax with Milton's recent 4-year prison sentence, serving as a cautionary tale for the EV industry. Nikola's rollercoaster journey underscores the paramount importance of transparency in a sector fueled by audacious promises. The fallout from this high-profile case serves as a stark reminder of the severe consequences when trust is eroded in the fast-paced and highly competitive world of electric mobility. In a further unraveling of the deceptive web woven by Trevor Milton, additional revelations have come to light. Investigators found that Milton not only misled investors about the costs associated with hydrogen production, but also fabricated statements concerning Nikola's pickup truck orders, and battery technology. The legal saga reached a critical juncture in October 2022, when a Manhattan jury delivered guilty verdicts against Milton on 3 of the 4 criminal counts of fraud brought by the Justice Department. The charges included 2 counts of wire fraud and 2 counts of securities fraud, with the jury acquitting Milton on 1 of the securities fraud charges. During the recent sentencing hearing on Monday, attorneys on both sides engaged in a contentious debate over the extent of losses incurred by Nikola investors. Discrepancies emerged as probation officials tasked with recommending penalties estimated that Milton caused $125 million in losses, while prosecutors contended the losses ranged between $661 million and $674 million. In a bold assertion, Milton's defense argued for a loss amount of $0. Ultimately, the presiding judge rendered a consequential decision, sentencing Milton to 4 years in prison for each of his 3 convictions. Crucially, these sentences will run concurrently, shaping the contours of the penalty imposed on the disgraced entrepreneur. The ruling reflects the gravity of Milton's fraudulent actions and underscores the significant financial impact on Nikola investors, a contentious point of contention throughout the sentencing proceedings. As Milton begins his 4-year sentence, the repercussions of his deceit continue to reverberate through the electric vehicle landscape, casting a shadow on the once prominent aspirations of Nikola Corporation. Enjoying the video so far? Be sure to join our Discord community to connect with other like-minded investors. Let's talk about Nikola's stock. As of Tuesday, December 19, 2023, at 4:45 p.m. IST, Nikola Corporation's stock, NKLA, is undergoing significant turbulence, marked by a current price of $0.8105 reflecting a sharp decline of 9.95% from the previous close. The day's trading range has been noteworthy, fluctuating between $0.9700 and $0.5210, while the 52-week range demonstrates the stock's volatility, spanning from $0.5210 to $3.700. With a market capitalization of $337.446 million and 1.16 billion outstanding shares, Nikola's financial health is under scrutiny. The public float stands at 884.75 million shares. Key financial ratios provide insights into the company's performance, with a negative P/E ratio due to unfavorable earnings per share (EPS) standing at minus $1.5671. The beta reflects moderate volatility at 1.05, and the trailing 12 months (TTM) reveal a revenue of $31.31 million, showcasing challenges amid a gross margin of 740.36% and a staggering net margin of minus 2,957.70%. Recent developments have intensified the stock's downward trajectory. Founder and former CEO Trevor Milton's sentencing to 4 years for fraud has undoubtedly contributed to the negative sentiment. Analysts are echoing concerns about Nikola's viability and leadership, prompting downgrades. The hydrogen market, crucial to Nikola's vision, is clouded with uncertainties regarding infrastructure challenges and demand outlook. Analyst estimates present a mixed outlook. The median price target for NKLA in the next 12 months is $1.39, marginally higher than the current price. However, analysts remain divided, with some anticipating further declines while others cautiously express optimism about the potential for the company's turnaround. Despite the prevailing negative sentiment, today's trading activity witnessed a surge in volume, exceeding 985 million shares, indicating heightened investor activity. Notably, short interest remains substantial, underscoring persistent skepticism about Nikola's future trajectory. Investors await the release of Nikola's Q4 2023 earnings report in February 2024, anticipating crucial insights that could shed light on the company's financial performance and future prospects. Remember that this is not financial advice, and you should always do your own research and make informed investment decisions. That was all for today. Let us know if you think this stock will make you rich or not in the comment section down below. Hit like and subscribe to our channel $1 World for more such penny stock videos, and we'll see you in the next one.